Hello, James Blackall's JB Commercial Finance here, and I want to talk to you today about one of the services I offer, which I don't talk about too often because it's a bit lower profile than commercial mortgages or bridging lending, or if someone needs some money desperately to turn around a situation such as a VAT bill or an HMRC liability. But I want to talk about invoice discounting and factoring. Now, this is a product which occasionally has had a bad press in the past. Certainly a lot of accountants don't like it, a lot of banks don't like it when a customer has an invoice discount facility or a factoring facility with another provider, because it means they lose control of their cash flow potentially. Now, there is a bit of a change in perception in this facility over recent years, as the main players in the market, there are several of them, the high street banks included, plus a lot of specialist providers, have got a lot cuter with regard to the way they work, a lot cuter with the way they manage their profile, and a lot better with regard to their charges. So the stigma involved in invoice discounting and factoring to a large extent has been removed, and it's getting the mindset away from it being a lender of last resort to actually, for a lot of people, it's the perfect solution. Now, for those of you who don't know, the way these facilities work, and there are different variations, whether they're confidential or not, is that a customer, normally it's a manufacturer, for example, or someone who builds up quite a large debtor liability, has a debtor book at a certain level, they come run into cash flow difficulties. We all know that about 4 out of 5 businesses in this country struggle to get paid on time. A lot of invoices don't get paid on time. But in the meantime, they've got to pay staff, they've got to pay their rent, they've got to pay their bills, and those costs don't stop. So while you might traditionally go to a bank for an overdraft facility, for example, or inject some personal funds into the business, what an invoice discount facility does, it allows you to raise funds against that debtor book. So the money you're owed, you can draw against a percentage of that, and the higher the debtor book gets, the more money you can draw. It works as a percentage. And traditionally, you'd normally look around about 80–85% of the debtor book being available. So to put that into a real life example, if you had a debtor book, so people owed you £100,000, they're all things being equal, they're good customers, they're not late to the debts, you could raise money against that to the tune of around about £80,000, which would go straight back into your cash flow for you to use to pay those bills. You would build the margin, i.e. the cost, into your invoicing in the first place, so therefore it would cover some of that liability. Now, the difficulty is sometimes that these facilities can be quite expensive, and the main reason for that is the cost and the risk involved, because it's a risky business. You are lending money against a debtor book, and if the businesses fail, who owe the money to business A, then all of a sudden it's worthless, and therefore the lender will be out of pocket. So it is a relatively high risk lending facility, which is why the checks are a lot better these days. And you can also manage these kind of books with debtor insurance, of doing additional credit checks, and we're keeping on top of robust chasing of the debt. And all this can be done for you by the invoice discount or factoring company. It's increasingly becoming a very, very good way to manage cash flow without putting personal assets on the line. If you went to a bank for a facility of the £80,000 I mentioned earlier, they would generally want you to put personal money into it, a personal guarantee, a personal security against your house maybe, while a invoice discount company won't want you to do that. They'll take a charge over the debtor book. Their security is that debtor book. Now, of course, that is higher risk security-wise than a charge over a property, and that's reflected in the cost. So, the crux of this matter is that invoice discounting is a great way to manage the cash flow of a business without putting personal assets on the line, as long as you can factor in the costs involved in this and to make sure it's affordable. I have several, as you can see on there, it is a product I offer, as I mentioned earlier. I have several of the largest factoring companies, invoice discount companies in the country on my accredited panel, so I can use them and refer you to them. For more information, give me a shout. Thank you very much.